I don't think many people understand the level of chaos happening in tech right now. This is just effing insane. Every group chat, Slack, email chain I'm in is going crazy. Founders have no idea if they'll make payroll. Investors have no idea which companies are impacted or if LP funds are safe. Employees don't have the slightest clue what is going on. Oh boy, folks, I just spent the last couple hours surfing around on Twitter trying to find you some of the most I guess you can say, valuable, insightful kind of information in regards to this. This goes so deep, and we're going to get so much more information over the next few weeks about this whole SVB situation. It is insane in regards to this bank. And I'm going to take you through some of this in this video, right? And we're going to find that executives were selling millions of dollars in stock just very, very recently, just days ago. We're going to find out that there are certain individuals that wanted this bank to fail because they have, let's just call it competing potential companies out there. This is a dramatic situation. I'm going to take you through some of this. I hope you guys enjoy it. Something different here on the reaction channel here tonight, but I'm like, this situation goes so deep. There's going to be so many twists and turns, and just the information I have to give you in this video is incredible. Never mind what's going to come out over this next few weeks. Oh boy, get ready for it, folks. Hope you enjoy this. As always, thanks for being subscribed here. 24,300 plus subscribers. Also, make sure you get in the Patreon. I just posted my moves I made in the Patreon here today. The buys and sells in there. That'll be pinned comment down there. Okay. So right off the bat here, just in regards to this tweet, obviously just goes to show you the severity of the companies, the startups that are involved in this, how serious it is for them, right? For 99.999% of people, it's not a very relatable situation because this has nothing to do with us. We're not in the tech field. We have nothing to do with this bank. Never even really heard of it before just a few days ago, right? And so nonetheless, this just kind of shows you how serious this is and how bad everybody's kind of freaking out about this whole situation, right? David Sachs, I believe he's on that In Money podcast. He says, where is Powell? Where is Yellen? Stop this crisis now. Announce that all depositors will be safe. Place SVB with a top 4 bank. Do this before Monday open. There will be contagion and the crisis will spread. Anybody that thinks that preventing bank runs and panics isn't a federal responsibility missed a couple hundred years of financial history. It's called systemic risk, and only federal banking authorities can stop it. David Sachs, in all due respect, sir, and I would assume you're extremely knowledgeable on all things money related. I would expect that, right? But you should understand how FDIC works, okay? So in regards to FDIC, it's up to 250. So all depositors, wait, is somebody safe if they got 20 million with them? How's that work, okay? Secondly here, in regards to when FDIC comes in, they basically do an auction for the bank, and almost always it's picked up, okay? Like, pretty much always they're going to find somebody to buy out whatever the bank that is, okay? And then within a matter of a few days, literally that bank reopens under another name, okay? And so, to act like, I don't know, Yellen has to get involved or Jerome Powell has to get involved. Like, this is FDIC. Like, this is what they're here for. They're here for these crisis type of situations, okay? They did this like a million times during the great financial crisis, where essentially a bank would go under. They would have to, come in, essentially. They would basically take over the entire bank, the operations, right? The employees would immediately start getting paid out by the FDIC rather than that bank. They would find somebody to buy the bank usually within 48 to 72 hours in most situations. Another bank would go ahead, buy them out. It would be now an umbrella under a new bank, essentially, okay? And then the other bank would usually get to pick up these banks for cheap. I mean, it's usually a steal deal. So that's why it's so lucrative and such a great idea if you're another bank to go ahead and buy one of these banks, because you're getting it for dollars, basically pennies on the dollar, and you're getting all the depositors, everything that comes with that, right? You get some bad that comes with that. But the best part is FDIC helps you with the bad part as well. So you get most of the good part without having to have as many, let's call it the bad that comes with it. It's a beautiful situation. It's the best situation you could ever possibly imagine, if you're the one that's buying out one of these banks, because usually what you're getting is the best of it and not having to put up with the worst, and you're getting it for pennies on the dollar. It's an ideal situation. So in regards to that, just understand FDIC and policy and how they work. Anyways, okay. Next one up here. Important to note that SVB's loan book, their assets are quite good. They hold a ton of securities. They just didn't have enough cash to meet withdrawal demands. And when that happens, you are not a bank anymore. Fear and panic killed a healthy key ecosystem ecosystem player, okay? I won't debate with that, but what I will debate with is they hold a ton of securities. Okay, what are those securities worth, okay? They could say we hold, I don't know, $75 billion of securities, let's say, for instance. But what are those really worth? If it's stocks, right? What are those stocks worth? What are those stocks worth, whenever they did their last audit and they showed that they had that amount of securities versus what those are worth now? What about in a week from now? What about if they put major selling pressure on the market on, particular positions at a time? Then what are they worth, right? Could be usually significantly lower numbers. If we're talking about private securities in that sort of situation, right? Then we're also talking about, think about this for a moment. This is very important. What do you think some of those startups are worth right now, right? That potentially had valuations of tens of millions, hundreds of millions of dollars, maybe even billions of dollars. Do you think they really have those sorts of valuations on them now? Do you really think they're worth what they were worth maybe a year ago or so? And maybe their securities were being recognized at old pricing? I'm not so convinced of that, right? And they can say, well, this is the last time a deal went through for this and they had this round. I don't know about all that. Never mind with all this contagion fear in Silicon Valley. I don't know if anything's worth what it was worth now at this point in time. So I think that's a big factor to kind of think about there. You could say you got this amount of money, that amount of money. It's all good. But, we'll see when you actually have to sell those assets, if you have to sell those assets, right? This is from a politician here. I'm working with my California colleagues to address the Silicon Valley Bank crisis. We must make sure all deposits exceeding the FDIC $250,000 limit are honored. Banking is about confidence. If depositors lose confidence on the safety of their deposits over $250,000, we are in trouble. Bank management must be investigated. Risk-taking investors should not benefit, but bank customers and innocent employees, depending upon paychecks, should not suffer for greed and recklessness of the wealthiest. Okay. He's kind of talking out of both sides of the mouth there between these two tweets. This person says, why? Why do we privatize the profits of these banks but socialize their losses? I understand for everyday account holders, basically under $250,000, but these people are sophisticated investors. And so somebody has $5 million with them, then that should be guaranteed $10 million, $100 million. And who's picking up that? Is it the California taxpayers? I wouldn't be surprised. Is it the California taxpayers? Or are they expecting the federal government to pick up those tabs, right? Because that's not the way this works. It's to $250,000. And so, the fact that all of a sudden now we want to say it's any number, I mean, you can do that, but gosh, that's a whole different precedence there. And to get some of those people, the average taxpayer, to then go ahead and bail out people that are very high net worth individuals that are completely unrelatable, right? Oh boy, that's an interesting proposition there. So in this situation, this sounds like some California type stuff, in all due respect. This sounds like some California type stuff. Like, I'm reading through this paragraph and then this paragraph, and I'm like, sounds like a little bit of a contradiction there, right? So basically, you want to bail out the wealthiest, because who's got more than $250,000? Usually the wealthiest, right? But then you're talking about should not suffer due to the greed and recklessness of the wealthiest. It's like whoa. Oh man, that's a special there. Okay, SVB. Closure in receivership is going to have a massive impact on the tech ecosystem. SVB was not just a dominant player in tech, but were highly integrated in some non-traditional ways. A few things we'll see in the coming days and weeks. One, SVB was incredibly integrated into lives of many founders, not just their startups, bank, and lender, but also provided personal mortgages and other financial services, a whole mess for FDIC or eventual buyer to unwind. Two, any uninsured balances at SVB, those above $250,000, are in jeopardy. FDIC plans to pay them out as it sells the assets of SVB. Lots of startups exclusively banked with SVB, as this was their covenant of their debt. That's key, and then that's why this SVB bank was so intertwined with everything, man. And you I think ultimately the government's going to do a lot of things, I think, over the next few years to put regulations in. So you can't wrap your clients up the way this bank, I've never quite heard it to this extent of how wrapped up they had their clients here. It's a pretty extraordinary situation. CEOs yesterday faced a hard choice. Pull your deposits and go into default on your venture debt, or risk losing everything if the bank failed. Many choose to hold tight as SVB's outright failure seemed outlandish. This is, I think I'm 100% sure they're going to put a ton of regulations in place to make sure a situation like this never, ever happens again. Because the more you go into this, it's like, oh my gosh, they had their clients basically almost forcefully wrapped up in a million different ways here. No, they might not be able to make payroll next week. Unpaid wages pierce the corporate veil, so boards are incredibly sensitive to employing workers they may not be able to pay. Expect mass layoffs later today or Monday at the least. And given the weak fundraising environment, a number of startups have been reliant on venture lenders, example SVB, not aggressively pursuing amortization of debt or triggering default for covenant foot faults, example cash balances. How will FDIC handle this? Mass defaults? Potentially. We'll see. Having run a startup through the great financial crisis, this is the first thing I've seen since that, even vaguely reminiscent of that time. Total you know what. One more thing, SVB also offered wealth management services to many of its founders. So your corporate lender, corporate bank, personal mortgage lender, and family wealth manager is all one bank, which is now FDIC receivership. Fun, okay? Once again, I don't think they're ever going to allow something like this to happen again. I think, government's going to be all over this over the next, let's call it, couple years here, and they'll put in a lot of protections to make sure this never happens again. But the bottom line is they let it run wild there, and it's kind of crazy to think, you would think, especially the fact that this was a bank, right? You would assume like they would have looked at this and really thought about it, but it's funny, it's not until it fails that all of a sudden the government, cares enough to like look into this and like be like, oh, crap. They let it fail, and then they step in and say, we got to do something. It's interesting how it works like that, right? Sam Altman, who I believe is a founder of this OpenAI, right? He says, I don't know if he wrote this or the AI wrote this, but he says, investors who ask, how can I be helpful? Today is a good day to offer emergency cash to your startups that need it for payroll or whatever. No docs, no terms, just send money. It's hard for me to imagine depositors actually losing money here, but so stressful in the meantime, he says. That was his perspective there, right? I thought this was interesting. NBA superstar Giannis, next level risk management. Supposedly he has money at 50 different banks. I think it's genius. Not because of the whole, FDIC insured. I think it's genius just for the fact that we already know, like, athletes always run through their money. The fact that he's got this many bank accounts, basically, he could never run out of money because he could just walk into any random bank pretty much in the United States of America and be like, hey, I think I got like $250,000 with you guys. And I'd be like, oh, yes, Giannis, you do, okay? He's got money for life. Now, at this point in time, 50 different banks, he's gonna forget even what his account numbers are and stuff like that. Like, you got to be kidding me, okay? Mark Cuban said this 2 hours ago. He says, a couple SVB thoughts. One, $250,000 is too low. It's insane that a small company that's, let's say, has $2.5 million in payables in payroll at the end of the month should be prudent and split their cash across 10 banks in case of a run. The fees and admin would be crazy, but great for banks. So I do kind of agree with Mark Cuban in this situation. I do think, they've had $250,000 be the guaranteed number at FDIC for like, oh my gosh, I don't even know how long. It's a flip and flapjack in a long time. They've got to raise that number. I agree. They haven't raised it, right? So you got to take that into account, and you could have made actions around that. But I do agree, $250 guaranteed is way too low. I think, they should probably raise it up to like $1 million. Probably $1 million. If you take into account the last time they raised that number, right, and they put it at $250,000 FDIC insured, check out what $250,000 was back then versus today. I would say it's, at least 3x, 4x, maybe 5x, 7x the amount of money. And so I think about $1 million is fair in regards to that, moving it in the future, right? And, I think that's just a move that has to be made. Like $250,000, I think back when they did this was a lot of money, right? $250,000 is not as much money nearly as it was back when they did that back in the day, right? So that's something to keep in mind. Jason here says 8 hours ago, hundreds of startups are going to miss payroll if SVB doesn't find a buyer this weekend or if the government doesn't backstop it. This is very serious. Note, if taxpayers backstop SVB, they should be senior and make it back at least 3x their investment for doing so. Yeah, that would be sweet, right? They're going to find a buyer. Like the FDIC doesn't, like even in the great financial crisis, they were finding buyers. Like it's almost a guarantee. Okay, I would put it like that. Okay, this person says, it's so weird seeing people trying to blame the victims, the depositors, for being in the wrong industry or something. It's simple. The bank made bad trades and lost, not the depositor's effing fault, okay? Now, so basically what this person's getting at, the point here, is they're upset that some people aren't really having sympathy for some of the people they banked with SVB, okay, and the Silicon Valley Bank. Okay. Here's the deal, okay? The bottom line is, and I'm going to show you the shocking numbers here in just a moment, along with obviously the executives selling stock here recently. That's pretty shocking. I'm going to show you the numbers behind this. But the bottom line is, most people that were with the Silicon Valley Bank were higher net worth folks, okay? And we're the Silicon Valley types that are already not very relatable and not super liked. Let's just call it what it is, okay? And so it's hard for an average person to have sympathy for these folks that had, millions of dollars potentially with them, okay? And it's hard for average folks that maybe make, the average person makes what in the United States of America, let's say, for instance, $40,000, $50,000 a year, for them to have sympathy for, software developers that make $250,000 a year. It's so unrelatable, right? It's so unrelatable. And so, for those folks to have some sympathy in this situation, I think it's a bit of a stretch, right? And never mind that, there's obviously, like I said, I think there's a lot of hatred towards Silicon Valley, those companies, let's call it the political beliefs of many of those companies, what some people feel are political agendas that have been pushed on them by different big tech platforms and just that whole situation. And so ultimately, I don't think there's a group that I don't think there's a group of folks that has a lot of sympathy for that world. Let's just call it that, okay? Of what most people view as cake jobs, making crazy money because it's pumped by stupid money out there. And meanwhile, you got people out there, landscaping yards and doing hard manual labor, and you got people, that are driving the trash trucks and are building homes and doing all those hard jobs, making pennies on the dollar from what those Silicon Valley folks make, crazy money that these folks can't even believe, and they get to eat these fancy meals that their employers have, and it's all laid out there, and they got, they can get massages while they're at work and have as many cappuccinos as they want in this climate-controlled environment and this beautiful office with these amazing windows, making all this money. I'm just telling you, people have sympathy when it comes to that and those sorts of levels. And that's the bottom line with that. And so if you're expecting sympathy, I just don't think this is the best group to ask sympathy for, because people just don't have it when it comes to tech for several different fronts in regards to that, right? This is where things start getting really interesting, right? I'd like to formally thank my peers in the venture community whose stellar leadership over the past 48 years triggered a run on deposits at Silicon Valley Bank, ultimately topping one of the most important institutions in our ecosystem. SVB made some big mistakes, including major failures in communications as its balance sheet crisis grew. However, the ultimate failure was from the hysterical urging on social media of venture capitalists who undermined our shared ecosystem. It has been a stunning failure of leadership. And I won't even get started on the fact that some of these venture capitalists have neobank portfolio companies that stood to benefit directly from SVB's failure. Ooh, juicy. Juicy, okay? Really, really juicy. Now, in regards to this, okay, this is where things start getting pretty darn dramatic here, okay? At the end of the day, what happens when money starts getting tight? People start fighting like piranhas. If you know Silicon Valley, VC, like that whole movement, tech, everything, guess what's happened? Money's gotten tight. When money gets tight, people start fighting. People start eliminating. Everybody can be friends when there's just an abundance. Picture it like this, okay? Let's say this garage, okay? We got this garage, and there's 50 guys in here, okay, 50 guys. And we have an abundance of food and just like, so much food. And everything's great. We're having a great time. We're all getting along, okay? And then the next day, we're all locked in this garage. It's 50 of us. The next day, instead of that abundance of food, they drop one steak in the middle and one banana, right? Now, some people might try to fight over that the first day, but some of us would be like, we're not that hungry. It's okay. Like, we can eat without a day. Hopefully they bring some more tomorrow. The next day, they come and bring one steak, and that's it, okay? Now we're like, we're really hungry. Hey, guys, how are we going to divide this up? And some guy's like already eating it. It's like, dude, quit eating it. And next thing you know, we're fighting, right? And next thing you know, it's a brawl breaks out. That's what happens when things get tight and resources get cut off. And so what's starting to happen now is things are getting tight, and so people are going to start fighting dirty. When the interest rates are at zero, there's just sloshing of money, everything seems great, everybody can get along. We're all an ecosystem, we're all friends. But I'm telling you, once the resources start getting smaller, that's when the fighting starts. That's when people start getting nasty. That's when it turns into a brawl. And that's exactly what we're seeing play out here. You saw this play out last year in the crypto space. And you saw certain individuals take down other individuals by causing basically crypto type bank runs, okay? Including that guy for that one institution that's still somehow up, that probably is going down next, right? Why did FTX go down? There's many reasons, but one of them was that other dude, okay? Let's just put it that way. And he wasn't the only one that caused some sort of crypto run last year that caused an institution to go down. So these folks learned from that situation. And don't be surprised if this is the last time. Don't be surprised if some get it back in their face here, okay? Look at this. Hey, remember when Powell said he wouldn't raise rates in April, June, July, and October of 2021? And people trusted him and the Fed and bought bonds with billions in customers' deposits because of those assurances. Well, they got wrecked. And that's how the Fed caused the crisis, right? Fair. But you can't trust Powell, right? I mean, I wish we could. I wish we could have, right? I think we all would have, if he would have said we were raising interest rates, I'm sure we already gone slowly risk off, right? But instead, next thing you know, they started raising like crazy, and it is what it is, right? So nonetheless, you learn that you can't trust the words of the Federal Reserve and anybody that's over there, right? This is just funny. I couldn't even believe this. A friend had sent me something similar. I think it was it was yesterday. I think it was last night. And he said that Kramer had just suggested the Silicon Valley Bank super recently. I was like, no way. Like, you're making that up. And sure enough, I saw it on Twitter. I was like, what? Come on, man. There's no freaking way. Like, you got to be kidding me, right? Oh boy, getting back into the juiciness. Silicon Valley Bank CEO, CFO, and Chief Marketing Officer sold $4.4 million plus in stock over the last 2 weeks. But they didn't know anything, right? Whoo-wee. Oh boy, okay. Yeah, because those shares are worth pretty much nothing now at this point in time. Well, yeah, nothing, okay? And they were selling at $300, $287, $287. Oh, yeah, that's not a good look. That's all I'll say about that. Not a good look at all, okay? Companies and institutions that need to be bailed out by the government when they fail shouldn't be owned, or should be owned by the government. You can't privatize the profit and socialize losses. Fair. Can't say anything about that one. Fair play, man. Yep. 100%, man. 100%. Yep. Look at this. Only and I spoke about this several times over the past, 48 hours or so. Only 2.7% of Silicon Valley Bank deposits are less than $250,000, meaning 97.3% aren't FDIC insured. Ouch. This is a problem, okay? In most banks, I mean, most deposits are less than $250,000, just to be honest, right? People might have a few $100, maybe a few $1,000, maybe $20,000 in their account, but none of the Silicon Valley Bank. This is a bank for the ballers. Let's just call it what it is, okay? And so, nonetheless, FDIC, in terms of this money, it's not going to be FDIC insured unless they do some sort of, let's call it extra protections that shouldn't be there. But is the public going to be all over that if they do? Once again, that's a messy situation there, okay? But this is significant. This matters in a huge way, okay? SVB had a Moody's credit rating of A just 3 days ago. Oh, yeah. Credit ratings. Have I ever cared about them? Nope. Have you ever heard me talk about credit ratings on my channel since I've been doing this channel? Oh, I haven't been doing this channel since 2016. My main channel since 2016? Never. They don't matter. Those guys are clueless to the credit ratings. I'm just telling you, you got to do this stuff yourself. You got to look at your company's balance sheet, where they got money, where they don't have money, what their debt's at, what interest are they paying on their debt, what their income statement's looking like, what's the chances they would start losing money. You got to run the numbers. You got to say who the backers here, if they got into some trouble, who would back the company. Because I'm telling you, these credit ratings are a joke, complete joke. As you just saw, 3 days ago, this baby was rated A. It's an A. It's beautiful. It's so ultimate. An A 3 days ago. Now it's nothing, right? You saw, and the reason I've never had faith in these credit ratings and why I never talk about them on the channel or never cared about them is because I came up in the great financial crisis, right? Remember when I entered the financial world, 2008, 2009. And I heard story after story coming up at that time about these credit ratings agencies and how they would give these institutions that were going under left and right these A grades. Oh, it's perfect. It's an A grade. It's so amazing. And next thing you know, the company's under, and then this company's under, and then this company's under. And it's like, how are you guys grading this stuff? Okay, like what's going on here? I wish you were my teacher. I could have maybe went to university or something like that. Holy smokes, this ain't no joke. Elon Musk has the ultimate tweet to end the night here. Okay, this is perfection. Crypto is a scam. Keep money in banks, right? Banks are a scam. Keep money in crypto. That is so perfect. That is so perfect, man. Because obviously we know what played out last year, right? We know what played out last year. Last year was the year crypto really got it. It was crypto this, crypto that went under, this went under, that went under, right? And everybody's like, oh, you bunch of idiots messing around with crypto. You need to just, keep your money in a bank, those sorts of things. And then all of a sudden this SVB goes down and people are like, I don't know, man. Is my money safe? But like I said, this SVB, this was way more than a bank. Way more than a bank. And I don't even know if they should have really been a bank like that, to be quite honest, okay? Hope you guys enjoyed today's video. As always, I appreciate everybody joining me. 24,300 plus subscribers now. Thank you, everybody that's here. Make sure you join us in the Patreon down there to see all the moves I'm making, the buys and sells. And you also get to support the channel and support the content that will be pinned comment down there. Much love and have a great day.